Ladies and gentlemen of the crypto space, we're live on a Monday, November 6th at 11:29 a.m. There's a lot to go over today because the market is moving in a favorable direction, to say the least, but we have to understand where we are. And a couple weeks back, we had a certain tone to our conversation, maybe a month or so ago at this point, and that tone hasn't changed. Nothing has changed with what's going on. Everything is remarkably the same. Let's pop it over to the main screen. We're going to look at some technical data today, as we always do. And we'll start off with the dollar. Now, the dollar ripped right back up to the 107.1 and change. Clearly a significant lower high from a monthly perspective, but structurally, there is plenty of reason for the dollar to continue ripping, especially into 2024. Economic activity inside the domestic U.S. is contracting, and they're cutting rates around the world. So the cutting of the rates around the world is going to increase liquidity in the real economy as credit continues or starts to flow again, rather. But as long as the rest of the world is cutting and the United States remains relatively tight, that also dries up liquidity because it crowds out investment into other governments. It crowds out investment into other investments because you get a very high risk-free rate of return dollar denominated in U.S. government debt. So when does the Fed pivot? Do they pivot? I think they're going to remain relatively high. I think the rest of the world is going to cut to a degree because they have to maintain the functioning of their real economy. And at some point, the U.S. will likely cut as real economic data continues to get kneecapped because real economic data is probably best represented by gasoline prices, and gasoline prices, if you inspect the 3-month, is starting to push below the time-weighted average price. This would be quite interesting to see further continuation to the downside. This is real economic activity. If it's not just individuals, the vast majority of fuel is consumed by enterprise, trucking, so on and so forth. Diesel prices would be a great chart as well. But as this is decreasing, it represents decreased activity, not necessarily just economic activity, but activity in general, because you're not really doing anything if you're not traveling, whether it's for work or personal reasons. So this is a great expression of sentiment, of a necessity for individuals to cut back, and this is decreasing. But as gasoline prices decrease, oil prices should decrease as well. And as oil prices decrease, that has a global effect, and that's a leading indicator on the dollar. So where are we with the dollar? The dollar started to push below the weekly time-weighted average price, still right on the monthly time-weighted average price. So there's a convergence of time-weighted average prices on the weekly and the monthly, and this is like, we always have a crossroads with regard to technical data. Like something is imminent or something is very interesting with regard to prevailing directionality, and this is just another example of that being the case. A push through the monthly time-weighted average price implies continuation to the downside, and we're far from being able to produce a lower low. You need to really breach 100, which would be pretty massive move from where we are, and to get from where we are to lower than 100, that implies significant structural change to the way capital is flowing through the world. Let's go out to the 3-month real quick. So we're way above the time-weighted average price on the 3-month. There's a long way to go before we have structural liquidity conditions returning, or structural favorability for liquidity conditions to return. Definitely not from a real perspective in the United States, the real economy. Credit is not going to loosen. Rates are not going to come down unless they have to. And that is the last narrative that anyone should be focusing on. That was a very popular thing on social media, like, when are they going to cut rates? No, that is not what's important. And look, if that is what folks were focusing on, they clearly miss major economic activity, especially in the crypto markets, which is what we look at. And the economic activity in the crypto markets is not necessarily just the manifestation of credit in the real economy or even liquidity in the real economy. It's more aligned with liquidity in the financial economy. So, one way for the U.S. to structurally support, the system, and the Fed expressly mentions, basis swaps and very large leverage that hedge funds place on government debt. They're worried about liquidity in the financial economy, and a great way to shore up systemic growth or expansion of liquidity in the financial economy is to increase dollar supply. And that's an interesting mechanic. Treasury issuance influences global dollar supply by issuing debt, because those are converted to dollar liabilities globally. And we'll see. They really propped up your liquidity sources to alleviate stress domestically. There was a fresh bank takeover by the FDIC on Friday, Citizens Bank, a large bank. Did anyone hear about it? No. It was consumed and it was bought by another bank. And it's just literally these giant banks are getting spread around and consumed, assimilated by the rest of the system. And that props up the availability of liquidity. And why do I say the availability of liquidity? The availability of liquidity to finance withdrawals and to offer the sense of systemic stability to these banking institutions, because that cascades real quick. That goes viral real quick, those kinds of stories. So, I guess the whole point of a lot of topics I talk about recently is you're not going to get what the mainstream thinks is to occur. You have to understand the way the system works, and the system works in funny ways. And right now we're in a period of where connectedness is the topic that I wanted to talk about today. So if charts are showing strength in crypto markets, that information spreads, and that draws in more market activity, that draws in flows. And we have constrained liquidity environment. So that doesn't mean there's an absence of liquidity. That doesn't mean there's still not an extraordinary amount of liquidity in the system. It's very much consistent with my thesis that the higher interest rate environment in the U.S. warrants a invalidation of what was investable. You're not going to get the growth that we've had. You're not going to get a 10x on Amazon. But that's not an expectation for the vast majority of investors in such an asset. But the growth narrative, how are earnings going to continue to increase if credit rolled over and the strength of upward spending was fueled by credit in 2023? So if credit's rolling over, spending's going to come down, earnings are going to come down. So I don't see any way to argue that the growth narrative from an equities market perspective is appealing. It needs to become flat and boring based on market conditions. It's not even market conditions. It's the structure of society. Everything has changed. And note that is real economy. The financial economy is a different ballgame. Like, for instance, our favorite products or our favorite assets offer products and services catering to the financial economy. That's all it is. It's a product and a service, a capacity to collateralize some sort of asset that contains equity, that contains value, and the product is a dollar liability. And that dollar liability is an entire business, because you have to manage the liquidity, you have to manage the incentives, and all of that lovely enough, is managed by software. So there's no humans that are managing underwriting, no humans that are managing the liquidation process, no humans managing customer service, at least in the way we would describe a traditional enterprise. So these products and services are the perfect place to be looking, considering the way the real economy looks from an investment standpoint. I mean, I don't see the growth potential, growth narrative in the real economy. I don't see the cash flow potential in the real economy, because if, the only difference between growth and cash flow is like reinvesting profits and buybacks and propping up the share price instead of offering cash flow to investors. So the only reason you had, cash flow and value type assets in the real economy was the desired, the chosen structure of a business, or favorable tax treatment by some sort of product encapsulation, such as a REIT, where you have to return X amount of revenue to the investors, and that is probably going to shift in the coming years towards offering value to investors rather than just the growth of the share price. We've seen record inflows into the equities markets. Maybe that's just 401ks, and I just see it strange. And frankly, from my perspective as a contrarian, that's not where I want to invest. If the vast majority of people are participating in equity markets via 401k passive flows or their own individual brokerage account, and they're pouring their money into the Magnificent Seven and Apple and Microsoft, that's the last place I would want to invest. So as an investor, I have to think to myself, I got to do the opposite of what Gen Pop is doing. I have to look elsewhere, to different types of enterprise, to different types of products, different services that cater to a different part of the economic system. And frankly, the financial economy seems positioned very well for growth. Growth, not just value, as compared to the real economy, because the financial system, if there's a contraction in available liquidity, that negatively has a knock-on effect onto the real economy. So both economies are, intrinsically tied. They affect one another, loosely coupled, but they sure as hell have very observable knock-on effects. So you got a big collapse or deleveraging of bonds, and bam, those yields are going to just either crash or rally, which is exactly what we saw in 2020. And do we see another event like that again? Well, look, that surely affects the real economy. But I think the financial economy is surely more exciting. And look, from an information connectedness standpoint, so does a lot of people. And I think from a political standpoint, it's much more favorable to extend financial support and liquidity to the financial part of the economy as compared to the real economy. 2020 was an exercise of extending support to the real economy, and it caused all sorts of distortions that we haven't seen in a long time. Propping up liquidity, individual liquidity, a person's bank account. If you have $10 in your bank account, you're relatively illiquid. So they propped up the liquidity of the real economy to keep spending going, to keep earnings going, to keep companies' income going. And that created all these distortions in the supply chain, especially with a constrained supply chain. So for so many years, for the last 40 years, let's say, they provided meaningful support to the financial economy, and it didn't cause necessarily the distortions we saw in 2020. And that's the whole rich get richer and the poor get poorer narrative. It's not necessarily the poor get poorer, it's that the poor don't keep up with the growth, the inflation of asset prices, as support is provided to the financial economy that allows stability and potentially continued expansion. So what can they do? you support the financial economy. You can't let both the financial economy have some sort of systemic event along with the real economy, and credit's already frozen in the real economy. And how the hell the banking system going to handle the commercial real estate situation? It's going to take a half a decade or a decade to convert commercial property to alternatives, residential property. So support in the financial economy is manifesting itself very visibly in this chart. Look at the 3-month on Bitcoin. Look at that strength. It produced the higher high. We have a month and 26 days, obviously, to close the candle, but that's very much an interesting higher high as compared to Q2 2023. So where are we from a Bitcoin perspective? I'd say we're right about here. I'd say we're about April 2019, Q2 2019, Q2 2023. Oh shit, is that 4 years later? Isn't that fascinating? So if we're at about Q2 2019, that was leading into stress in the financial economy in end of Q3, September 2019, where the repo market exploded and the U.S. banking system basically failed. Now, will they allow such stresses this time? There's a repo market. It's a standing repo market. There's a standing reverse repo market. What are they going to do with the BTFP? That's probably more so, the real economy. Probably, maybe. But I guess my train of thought is, do we have issues with regard to systemic liquidity like we did heading into 2020? Surely not going to necessarily have a pandemic, or at least that narrative that was spun by the system to express some sort of control and desired behavior by the population. So if we don't experience that kind of volatility, we should see continuation from here for the following 1, 2, 3, 4, 5 quarters, which is a year and 3 months. And that's right off of the candle we're on right now, Q2 2019, Q2 2023. Got the same kind of vibes going on, in my opinion. And let's see where we go with Q3, Q4 of 2019 and Q1 of 2020 as compared to now, which is equivalent to the same thing in 2023. Q3, Q4, 2023, and Q1, 2024. If it wasn't for what happened in the repo market as well as March of 2020, we wouldn't have had this price appreciation here. In Q2 2020, it would have just continued from Q2 2019. So, other thoughts, Bitcoin's at a bit of a premium. You're above the 3-month TWAP. You're significantly above the 6-month TWAP. We've had some big rallies. There's plenty of room for significant pullback from here. Always remember, you turn off your price feed and you look at the average, and you can see where the average is about 31. So there's a bit of a premium built into the Bitcoin price right about now. Let's take a look at chart data for Ethereum, because Ethereum is probably structurally favored for a little bit of outperformance as compared to Bitcoin in the short term. Bitcoin has some significant price movement, but Ethereum has yet. But if we look at the weekly, this is an interesting structure that's right about now. So this is like real-time data. What's going on? We pushed above this triangular compression. It's decent structure to it. Some nice wicks. So this looks favorable from a continuation standpoint to the upside. Early in the week, 6 days, 8 hours left in the candle. So there's nothing to be seriously optimistic about. I mean, that could be the way you engage with markets. Like, oh my God, I hope it breaks out. No, take your time. Let the candle close. But this looks very nice from an Ethereum perspective. And just remember, as price appreciates, momentum builds, and it will accelerate faster because information connectedness. The price going up draws in more capital. So it's kind of like vacuum. Liquidity siphon. It siphons the liquidity in, so to speak. Prisma launched, and Prisma seems to have potentially found a bottom at the 80-cent region. How about them apples? Prisma, what was it, 64% has been gobbled up by convex. So I found that interesting. I I wasn't up in the middle of the night to claim my CVX CR Prisma, and I chose to wake up this morning and I opted for a VE Prisma. Provide a little bit of liquidity, and that's my participation in this new launch. And I have a decent opinion of what they built, especially with the large gobbling Convex has done of Prisma right off the bat. You know, that's kind of unique, especially in launch history of various protocols. You know, the direct work, the quick integration into Convex. It's very interesting because of what Convex did for Curve. And it literally did it for this, like pretty much right off the bat. Look at that price action. Very interesting. Yeah, obviously the exponential, the hyperinflationary decay of price point. But what's so fascinating is it came down so quick. That's efficient. And now the vast majority of it is in Convex, and Convex is financing disruption of circulating supply. And frankly, the Prisma implementation is quite nice. Their user interface makes a lot of sense. I see potential reason to think that the 80 cents was a low. We've already printed a higher low, which is interesting from a 4-hour candle perspective. As always, this is very early. You have no idea what the hell it's going to do. So I sized accordingly, and I didn't take on much risk. I don't plan to take on much risk in these market conditions, but I took on risks that I was comfortable with, and I quite like what I see with their implementation. 1,820%. How could he not have continued depreciation? So you got to expect continued depreciation, or maybe Convex financing at what it's financing, what 200+%, is enough to dry this up and dilute it. Or maybe this just dilutes itself. Sometimes you don't know what's going to play out until it does. You only know from a hindsight perspective. So the whole question becomes, you size accordingly. That's what I chose to do. We have too much experience with excessive dilution or excessive emissions, but we also have a lot of experience to go on nowadays. And if anyone could potentially deploy that experience to produce a favorable outcome, it's someone that's closely tied to the Curve and Convex ecosystem. A lot of folks, don't have the highest opinion of the emissions and recycling and sterilization, but I still think that it's a big idea. The analogy with the federations, and we talked about the sovereign states over the years at this point. Don't get me wrong. There's plenty of probably different ways to do these types of incentive regimes, but I think this is quite interesting to say the least. If you make it, people will use it. And look at the chosen collateral. It's literally LSDs. It's just all LSDs with a relative risk profile and different interest rates. And it's incentivized that. So it takes a page out of KeyDAO, takes a page out of a couple of different playbooks. So that's quite nice to see. A couple of folks chiming in. Earends in the house. Kazin, Trevor, much a pleasure. 14 people making it mostly through the stream. What else can we chat about today? Ethereum, Bitcoin, S&P's flat. Where are we with Ethereum, Bitcoin denominator? Let's go out to the 3-month. So 2 circles we're highlighting. They're completely different worlds, completely different markets, different time periods. So the same thing happens with the time-weighted average price, no matter the denomination. So Ethereum is still relatively cheap compared to the current Bitcoin price. Albeit there's a bit of a rounding to the top there. I think there's a good chance for Ethereum to continue its narrative, especially short term, 1, 2, 3, 4 years. A good quarter of a decade. But there's still on the back burner the future of where things are going to head, roll up, so on and so forth. GenPop's not going to consume $30, $40, $50 transaction fees, and certainly not when Ethereum is in firing all cylinders mode of $300, $400, $500, $1,000 transaction fees. But that'll be an interesting future where the big banks and the transactors handling, big 7, 8, 9 digits, $1 billion transactions, do they give a shit about a couple of $1,000 transaction fee to have the finality of mainnet? They don't want exposure to roll-ups with that kinds of size. And plus, you need the liquidity of mainnet. I guess it's follow the liquidity. That's a talking point we've had for a long time. You follow the liquidity. So always check back at DeFi Llama and see where the liquidity is, and that's where the opportunity is. Let's take a look at stablecoins. We haven't done that in a bit. Marginally negative sum on the week on Ethereum mainnet, but notice I think all is positive. Yeah, a little bit positive sum, and that's clearly from a Tether perspective. USDT. Tether still drives the entire market. We'll see what happens with USDC. Still very functional and useful, but that has lost a lot of ground to Tether over the last year, give or take. Let's take a look at the side chains, roll-ups. Some nice positive sum activity on Arbitrum. Probably some good gains going on over there. I saw, who did I say? Oh my God, it's been so long, I forgot the names of protocols on Arbitrum. But suffice it to say, I've seen some positive activity. Solana, marginally positive sum. There's such little liquidity on the dexes. Fascinating the way things are going to play out on Solana. Avalanche, very much negative sum. That is very large. Careful on Avalanche. Optimism, Arbitrum, Polygon. Optimism, Arbitrum seem to be offering the greatest strength. I don't think there's anything else worth looking at. Maybe Kava. That's horrible. But where's Cosmos? Let's take a look at the chart for Cosmos because that has been doing very well lately. Zoom in on the monthly. That looks like a nice higher low there. Still got a lot of room to go before the time-weighted average price on the monthly. Weekly above the weekly, but that doesn't give us much confidence considering it is still way below printing a higher low or a higher high. Let's look at the 3-month. What's nice is it has Ethereum vibes, multi-year cycle vibes, like it never really got below the all-time high in 19, and we shall see. I still follow DOT. Still potential. Follow the liquidity. That's the bottom line. And that's where the opportunity is. Do not overexpose the hopes and dreams of something small becoming something big. The liquidity tells us where the opportunity is. Osako made it live. Considering the Prisma launch, I believe the permissionless ability to borrow against bearer assets is the number 2 narrative behind the stablecoin story. Well, that is a stablecoin. And from an enterprise perspective, that is the product. And that is a big product. That happens to be the biggest business on the planet. The capacity to take collateral and convert it into a unit of account, be it a unit of account that is suitable for settlement or it's liquid, maybe pegged, with another unit of account suitable for settlement. And what does that mean? A stablecoin, if it has liquidity, with bank liabilities on chain, and really the predominant bank liability on chain is USDC, you can acquire actual bank liabilities, and those bank liabilities can be used to pay a credit card, or you could transfer them for debit card use. So that's the biggest business on the planet, dude. It just is what it is. And literally, you're looking at such a simple website. To many people, they wouldn't understand it, but you're literally looking at the biggest business on the planet, the printing of dollar liabilities. How many trillions and trillions and trillions of dollars are made and added to the system using literally the type of system that this is. Just obviously, the general public has never had access to these types of systems. And that's why it's taken us some time, years, to really digest the significance of them and to peer through the bullshit where this may be like, what kind of business this is? It's skeptical of this business, not understanding of it. Is it a scam? This is an incredible business. And we've seen that these types of businesses, what kind of risk is involved? You have risk of bank runs, Terra Luna history. You have risk of volatility. You have risk at the smart contract level. So you assess your risk, you size accordingly. And I opted for some exposure in addition to the airdrop. And $1.32 is pretty good. I think I snagged it this morning with whatever slippage it was adding to the LP at like $1. Maybe $1.07. Is that 30% rip? I didn't deploy much, but 30% rip is nice and comforting. Dan, morning. What do you think about Prisma and the token? Well, look how much got locked by Convex. That's quite interesting, considering how short this has been live, how short a time span this has been live. That's quite extraordinary how many people just threw it into CVX Prisma. I mean, they already have over 64% of circulating supply. That's crazy. That's crazy. I mean, they're financing it, and that's what the interest rate is on the Convex website. Throw in a fee switch, and was there $100+ million? How much is in the vaults? Oh, that's a lot of money. That's a lot minted. Holy crap, holy. It's like $170 million. Wow. This looks very interesting. Now, what does this mean for other protocols that mint dollar liabilities, create LSDs or accept LSDs as collateral to mint dollar liabilities? To a degree, competition, but I'm in the mindset that you're not going to care about competition. The market is so small. And I think there's plenty of room for all these types of products. I very much look forward to Tapioca coming online. Frax obviously has its momentum and strength and lendiness and trust. CRVUSD is doing exactly what everyone has hoped it would do. And I think this just fits in nicely with the ecosystem. I mean, look, it's very similar collateral to what CRVUSD accepts. Notice that CRVUSD has a different peg mechanic, and this is more liquidity style with a mint fee, albeit the interest rate is a deviation from that. But this is, I mean, Curve is tied in with the incentive regime recycling, but this is offering a yield on debt. You're incentivized to take on debt, so that's quite distinct from many protocols. Maybe QiDao is what did that. So it's been a hell of a launch. $1.32 coming off from 80 cents. Yeah, not looking at the highs. Everyone expected a hyperinflationary decay. I would hope so. So that's this very interesting price action since this morning or last night. Or no, because why does this chart say November 5th? Yeah, November 5th. Last night it was about 80 cents, and it printed a nice higher low. This is a chart that is very intimidating to persons just getting into the space. But when you understand why it did this, it's like, it makes sense. It was expected. And then convex comes along and gobbles it up. Oh my. Where have we seen that sequence of events before? I think we've seen that with exactly what convex has done to many protocols. Sergio's in the house. A pleasure. Case and stablecoins work best as friends together. Yeah, and I think that's something unique to the crypto markets because of the connectedness of information, the memes, the storytelling, the artwork, the presentation, the marketing, the collaboration. So you find that these protocols are very much likely to have synergies with one another and often engage in collaboration. And any system is stronger with multiple participants, especially opt-in participants where they're actively engaging and choosing certain behaviors to be cumulative, to have a synergistic effect. So that's exactly what nation states do with allies and trade deals and arrangements and contracts and so on and so forth. So we see a growing environment, a positive sum environment with regard to cooperation. And that's comforting from an enterprise standpoint. Find these enterprises much more comforting than anything we see in TradFi. Lucian, convex control 70%. They're up to 70% already? Wow. It looks like that convex yield is garnering a lot of attention. No, I don't want Kepler. 262%? Wow. No, that's what I thought. It got diluted. It got diluted since this morning. So 180%, but that makes sense. And once that Prisma's in CVX Prisma, it's gone. That's not going to affect it. You can only affect liquidity or price action of Prisma indirectly vis-a-vis CVX Prisma and a Prisma LP when it's available. That's indirect. It's not going to directly affect the Prisma price. Very nice data so far. Look at these numbers. Very big yields. Then when I see that, I expect continued depreciation, but it seems like either convex just incentivizing enough to consume that liquidity that people are trying to liquidate and extract the liquidity, or it's just favorable enough that people just want to accumulate the governance asset. And from an emission standpoint, I haven't looked at it. Maybe it's freaking hyper disinflationary. I don't know. Maybe it will be scarce. And scarce this quick after launch? It's quite interesting, if that's the case. So, size accordingly, assess risk, and that's why I took a little bit of additional position, not much. You can make an extra $100, $200 a day. That's pretty cool. That's pretty cool. Couple of bucks, but it's because of the 2x boosted. How long does the 2x boosted last? I wonder if this 2.25 is individual. I don't think it's individual. I think that would be collective for all liquidity participants. But I might have my eyes on it. We'll see how it plays. What's going on with Cake? My sentiment is, even though it's Aura and all those folks are involved, I just have no interest in Binance Chain whatsoever. And that'll be to my detriment, probably, but whatever. I have no need to spend that extra attention, and I don't want to excessively diversify, so I'm just not interested at all. It's just might as well just look at Aura and see what they're doing, because anything that cake would be doing is is manifested from Aura's experience as well as Balancer's experience. Paul, have you heard anything about OTC, where you can sell crypto peer-to-peer for asking price no LP? Wonder what the broad demand for such a thing will be. I don't think it would be a majority demand. I think that may be minority and probably large orders, but majority demand has got to be something that's like Uniswap-like, because that's the only user interface that the general public will be able to interact with from a competency standpoint. I want to buy this. I need to have this. Press the swap button. They're not going to be able to set bid price and ask price, and they're not going to be able to manage an auction type interface. That's not the majority of the population. So if anything, it would be a minority, a small minority that will engage with such a product. I have Solid up. So my opinion regarding Solid is actually interesting nowadays. I think of Solidly more favorably than Maverick. I see Maverick as like a 1-inch VC shop, whereas, for all the Solidly has put everyone through, I think it has come a long way. And they have continued to work and have produced an extremely efficient product. Whether it does well or not, I cannot answer, but I have a more favorable opinion of it than Maverick. And that's why I keep an eye on it every now and then. That's the deal. That's about it. What else we got? Where's Frax? Ooh, 666. You got to remember, this is a very big asset. So got a lot of liquidity. These trades it's constantly trading $20, $30, $40, $50,000 transactions. So it takes a lot to move it. And you get a breach above 7, and this thing should make some nice upward directionality. That'd be nice to see. Waited patiently. How many folks got in back here? Back in the $4 or $5 range, somewhere around here. Look at these dips down. Look, it's literally just horizontal. So crypto, this hasn't bled out. Who gives a crap from all-time high? And don't buy at all-time high. And you got to find your moving averages, and that's why we look at the 3-month and the 6-month time-weighted average price. You want your good entries, and this asset has literally gone horizontal since inception. It's the same with Curve, actually. And Curve, it's horizontal. 30, 40, 50, 60 cents. It's right here in the same region. And all of this is insanity. I mean, who in their right mind set this as the market price? That's insane. And who in their right mind deviated from the moving average to bid up the price this high? They didn't even have moving averages. It's so new. Who the hell would deviate from technicals without technical data? And they did, and that's why the price got bid up. And look how long it's taken. Look how long it takes for the price to bid up on the macro assets. Because it follows an average price, and average prices take time. And when you deviate, you mean regress. Look at the mean regressions to the downside very nicely. Mean regression. This is even a mean regression. Even the March of 2020 was a simple mean regression. What a lovely chart. And I'm not even looking at the price chart. That's a nice chart right there. Look at that chart. That's a chart. That's technical data right there. All right. Let's wrap it up for today. I appreciate each and every one of you that has made it to the end of the stream. 23 likes, 23 people, 14 likes. Smack that thumbs up button. I appreciate everyone. Tell everyone to subscribe. It's a nice week. We will see each other hopefully Wednesday, probably Wednesday, if not Friday. But this should be an interesting week. I got my eye on the dollar. Let's end with the dollar up. I look forward to seeing if this pushes below the monthly TWAP. We'll see some upward pressure on markets if that's the case. Link in the description to the most rational community in the entire crypto space. I appreciate everyone in there, and I will see you all later this week. Peace.